Imagine your restaurant's books look perfect. Sales match the bank, your accountant files everything on time, and the numbers make sense. Then one day CRA sends a letter saying your lifestyle does not match your tax returns. They reopen old years, add penalties, and claim you left income off the books. That's what happened to Tim Fuhr and his company. 1499546 Alberta Ltd, owners of Overtime Boiler and Taproom in Edmonton. Hi, I'm Amandeep Singh, CPA, and today we'll walk through how the Tax Court of Canada reviewed the evidence and why both appeals were allowed with cause. We'll also look how better records can prevent this kind of situation. Tim spent a career in hospitality industry, moving from dishwasher to restaurant owner. Through his holding company, he managed Overtime, Boiler, and Taproom, while another company, UL Investments, held shares in it. Everything looked normal until CRA ran a net worth and bank deposit analysis. They compared his reported income to household spending and decided something did not add up. CRA reassessed him for unreported income, added shareholder benefits, and said that the extra money must have come from the company. You see, the court examined three key questions. First, could CRA even reopen years that were already closed? You see, in this case, the law says they can only do that if the taxpayer made a misrepresentation and incorrect statement due to neglect, carelessness, or willful default. So, the court looked for clear proof that Tim made an actual misrepresentation in his returns. Suspicion or imbalance between income and lifestyle was not enough. Second, did the shortfall in his personal finances really exist? Tim said the money came from his late mother's estate. The court saw real evidence of this, like a $225,000 bank draft for 2011 and a $500,000 check from 2012, both non-taxable inheritance funds. CRA had ignored this in its net worth calculations. When those amounts were included, the supposed unreported income mostly disappeared. CRA had also counted shareholders' draws, money moved between Tim and his companies, as personal spending. Once corrected, over $320,000 in 2012 and $245,000 in 2013 were removed from his personal expenses. With those fixes, the judge found the CRA's net worth analysis was seriously flawed and could not support its conclusion. Third, was the company itself hiding income? CRA assumed that if Tim earned more money, it must have come from the business. But there was no proof of that. There was no net worth analysis for the company, no audit trail showing missing sales, and no link between the restaurant's bank deposits and Tim's personal accounts. You see, the company's external accountant testified that the books were well kept. The bank accounts were reconciled and the gross margins were consistent year after year. CRA had disallowed some expenses just because receipts were missing, but the judge said missing paper alone does not prove an expense was fake. The court accepted the accountant's evidence and found the company's records credible. After reviewing everything, the judge ruled that CRA failed to prove any misrepresentation, so the reassessment were not justified. Both Tim Fuhr and his numbered Alberta Ltd company won their appeals and CRA was ordered to pay costs. With that, the penalty also fell away. There's a big takeaway here for business owners. You see, when CRA uses lifestyle or net worth audits, every deposit and transfer matters. Key proof of non-taxable funds like inheritance or gifts, maintain clear shareholder loan records, and reconcile your bank and sales regularly. Strong records protect you when CRA looks beyond the numbers on your return. At Cloudriver CPAs in Burnaby, we help clients prepare that kind of a audit-ready file. We trace the money flow between businesses and personal accounts, reconcile the details, and build a clear story that stands up under review. Think of us as your Google Maps for income tax. We guide you through every turn so you never get lost with CRA. Thanks for watching, and if this story helped, hit subscribe and share it with another business owner who could benefit. I'm Amandeep Singh, CPA from Cloudriver CPAs in Burnaby. See you in the next video. Until then, bye.